Ladies and gentlemen, open banking pioneers, how you all keeping? And a big warm welcome to what is our last campfire of the year. And my word, what a year, hey? Thank you all for keeping us company. Now, our world has changed and our landscape is changing around us. Now, you asked to talk about the SME market and in particular, unlocking cash flow and credit. We heard you. Now, this is a big conversation. It's huge and it's important, and it's very, very relevant to all of us. So we've invited the Small Business Commission to join us to share their hands-on perspective. Now, we've a panel jam-packed of experts to really get under the bonnet and talk us through this, sharing, importantly, use cases along the way. Now, that is always my brief. No sales pitches, lots of data, lots of numbers, and use cases, because that's what you tell me you love to hear, especially those helping SMEs. Now, this panel is our largest. It's a little bit like when I invite people around for dinner. I've invited quite a handful of people, all experts, all have great opinions, and I am personally looking forward to hearing them all. Now, I'm going to come back to that in a minute. First, let me say some huge congratulations to both of our headline sponsors. The US Justice Department have just approved the MasterCard acquisition of Vicinity. So that's a great flag in the ground. Well done, Jim, and all the team at MasterCard. And interestingly, an interesting even fact is that 26% of our global audience is now from the US. So a big hello to all our friends out in the States. Now, also last week, Railsbank announced their latest funding round of $37 million. I think the coolest line I saw on LinkedIn was that they are refueling the rocket ship mid-flight. So congratulations, Nigel, and to all of the Railsbank team. Well done, guys. Now, please let me thank the very talented Karina. You will see Karina graphically recording what the amazing panelists are about to share at the side of your screen. And we will be sharing this content later, and the very cool slow-mo, which I think is amazing. I really do. Now, you know what I'm going to say next if you tune in every month. Please have a look at the QR code at the bottom of your screen, and using your phone, you can scan in that QR code, and through open banking payment initiation, you can make a charity donation. That's karma coming right back to you right there. It's powered by MoneyHub, and the gift aid is via Striva's API, and they call it Swift Aid. You're going to be hearing more about our charities next month. We might not be having a campfire in December, but we are certainly keeping our community connected for Christmas. And you'll also see on the screen that we're running a quiz to find the best use case in town. It's a little lockdown fun from Mission Plus, so thank you guys for the prizes. Nick from Mission Plus is joining our panel today. Now, he's out in Singapore. It's midnight with him, so I'm delighted he's joining us, and I believe that effort deserves a big shout out, so thank you, Nick. We've just completed our rapid sprint prototype process with Mission Plus and Accenture, so I'd love Nick just to say a few words around that thought-provoking even, can't say the word, provoking process, a tongue twister, because we absolutely loved it. Thank you. Now, I said this is an important conversation, and our panel is bulging with experts. So for once, we're going to drift over our hour by maybe 5 or 10 minutes, and it's our last campfire of the year, so why not? So without further ado, I'd like to hand over to Isabel Woodford, our guest host, who you'll all know is the FinTech journalist from Sifted. So Isabel, over to you to kick things off, please.
Hello, thank you, Helen. So yes, as Helen said, it's a big panel. I think we have 7 people with us today, so plenty of opinions and insights to go around. Before we get into what open banking is trying to do with SMEs and lending, we thought it would be helpful to talk about the problem that it's trying to address and really dive into the specifics of that. So I want to hand over first to Neil. Neil, if you could introduce yourself at first, just to give a bit of background about what you do, and then just outline what basically SMEs are dealing with when it comes to cash flow in the UK specifically.
Sure, thank you. Thank you very much, and thank you for asking me to come along today. My name's Neil Cowley. I represent the Small Business Commissioner, who is a guy called Philip King. Fortunately, Philip can't be here today, so I am standing in for him. The Small Business Commissioner basically is a UK-appointed official who has been appointed to tackle late payments and unfair payment practices in the private sector. Why has he been appointed, and why do we do what we do? And that's because the scale of late payment in the UK is huge, and it's actually really disproportionately damaging to small businesses in particular. Now, late payment isn't unique to the UK. It happens all around the world. It happens in Europe, virtually every continent of the world. The late payment exists, and it's damaging in all those countries. So it is a global pandemic, if you like, that causes a problem. In the UK, the latest government estimates, or actually put the scale of late payment, something around £23.5 billion that's owed specifically to small and medium-sized enterprises. So that's colossal. That's a huge amount of money. That's equivalent to putting 350,000 new vacancies into the economy. So it's massive. So this is why the UK government is taking that in such a serious line with that. Of that, really, to say, when we talk about SMEs, that in itself is kind of slightly misleading, because within that sector, there's actually a huge range of businesses. So there are around 6 million SMEs in the UK, but predominantly most of those businesses, over 96% of them, are what we would term micro businesses. So they have either 1 to 10 employees. So that could be sole traders, your freelancers, painters, decorators, nail bars, hairdressers. Literally, they make up the huge bulk of that 6 million. And why is that important? And that's basically because they are particularly at risk from late payment. They don't have the resilience of larger businesses, and they don't have the infrastructure to chase debt or late payments in the same way that larger businesses do. Again, to kind of put it in context, really, is that over half, 53% of all the SMEs in the UK actually report that they are victims of late payment, and some of them are waiting several months for payment. It's really, again, the scale of the problem for particular the smallest of the businesses is huge. And some recent work done by the Federation of Small Business has actually highlighted that around 50,000 businesses a year die within the UK, with a major contributing factor being late payments. So it's a hell of a problem that we need to tackle, but it can be done, and we are starting to see some results of that work now.
Brilliant. Yeah, that's a great overview. I mean, someone who knows and speaks to these small businesses, or micro businesses, you call them, is Boris from Anna. So I want to go to Boris now. He obviously has been managing for Anna, which deals with the freelancers. And I want specifically, Boris, if you could speak to the added cash flow issues that COVID has brought, and specifically the issues of accessing the government loans. I don't know if you can speak to those points in particular.
Yeah, thanks. We at Anna, we do both banking and what we call no-nonsense admin. That's what Anna stands for. And that's invoices, invoice chasing, receipt collections, even VAT filing. So we're really into help businesses to do banking and their day-to-day admin. And so what we are finding that around 1/3 of the invoices that our clients are creating, they never get paid. Well, we don't know whether they actually rendered the services or not, but most often they not. They have to chase their invoice, and that's what we do for them, and they chase it more than once. And another big issue we've seen is obviously during the COVID, the amount of late payments and invoices that need to be chased just grew and grew dramatically. And clients were turning for their bounce back loans. And that was really a disaster for those who have just recently started their business, because the bounce back loans were administered only through the high street banks. And the high street banks were not opening the accounts during the lockdown. And neobanks were the only ones who were able to open accounts remotely, but then no bounce back loans for these guys. And we've seen a huge outcry and a shortage of funds within the community of our clients. That was like number one priority during that period.
Yeah, that's a really good overview as well. Thank you. And I mean, so basically, just to summarize, we've got late invoices, we've got difficulty accessing loans. Mark, I want to come to you now. I know that you have a particular view on this as well about some of the issues facing SMEs. Mark from BankiFi, if you could just again give a very brief overview of what you do as well.
Sure, yeah, thank you. Hi, everybody. So BankiFi is a provider of beyond banking services, and we particularly jumped on the opportunity that open banking provided to round out the services that we small businesses, having run small businesses all my life, trying to help banks understand the problems that we as businesses face. So we're trying to build out services around banking. So similar to Anna, except we do that for any bank. It's not specific to one bank. We do invoicing. We have a request to pay service to help collections, a whole invoice to pay service, and so on and so forth. And I think to jump on Neil's points, which I think are really valid, that the biggest thing about this sector is it's completely misunderstood and unknown. It's everybody talks about SMEs as if they're an amorphous mass of the same types of business, and that could not be further from the truth. And to highlight that point, out of the 5.5 million micro businesses, sole traders and micro businesses, over 3 million of those use their personal current account to operate their small business, which means that two things: they're completely locked out of any form of business lending. So they can't get access to bibbles, they can't get access to SIBLs, they can't get access to term loans. If they want to borrow money, they have to put their house on the line or put up a personal guarantee, and the vast majority of them rightly would never do that. The second thing it does is it locks them out of banking services that would be offered to business banking customers. So you've seen a lot of talk around what Starling and Monzo and Tide are doing, but we know that 95% of personal current accounts are with the big four banks. So by definition, the vast majority of these businesses don't have any tools to help them run and operate their own business. And more importantly, they hate borrowing money. And again, to finalise why that's so important, the UK is the biggest market for invoice financing in the world. It's a £300 billion business. So out of that 5.5 million sole trading body in the UK, only 40,000 of them use invoice financing. So actually, we as an industry, it's a bit of a self-fulfilling scenario where we think that borrowing and debt and lending is the answer. We'll push credit, we'll push borrowing onto businesses that don't actually want it. And as I say, it's self-fulfilling. If you're a high street bank, or you're an iWalker or a funding exchange or a funding circle or a funding options, you want to say you need to borrow money. The issue with working capital is borrowing. It's not. The issue with working capital is late payments. And finally, that problem is a 71-day problem. In the UK, the average invoicing terms, according to Celent, are 80% of businesses have invoicing terms of 30 days, and they get paid within 71 days of issuing that invoice. So they're waiting for 2.5 times their terms. They're not charging interest, and COVID has only compounded that problem. So the real problem in working capital and cash flow is not pushing money and debt on the balance sheet. It's actually solving the late payments challenge.
Yeah, so your point is businesses shouldn't have to get a loan to cover the cash flow gap between receiving the money and issuing the invoice. They should just speed up receiving the money rather than
the industry shouldn't have a self-fulfilling prophecy that we should be pushing more debt onto businesses' balance sheets. That's just compounding the late payment problem.
Yeah. Brilliant. I wanted to just also remind people that they can submit questions via Slido before we move on. So feel free to do that as well. In a way, it's crazy to think that this is as unsophisticated as it is. I wanted to go over to Nick in Singapore to find out if it's as bad in Asia. What are you seeing there, Nick?
Oh, thanks so much, Isabel. So just to quickly elaborate from what Helen was saying. So Mission Plus, we're out here in Southeast Asia, for those of you who don't know, and we have been helping OBE rapid prototype solutions for the community of OBE and reimagining what that can look like in 2021. So that's maybe one of the reasons why we were invited today. But in terms of coming back to the topic, it is a universal problem, as Neil said. So there's not a lot of difference, I think. One personal experience that I had a few years ago, just when I had my first startup that was issuing Visa prepaid debit, we really felt that prepaid debit could actually activate SME sort of solutions around cards and having access to be able to, replacing petty cash. But what we found when we actually went into the market with this solution was that a lot of small business owners, for example, didn't even want to pass that on to their employees because they were stuck in working capital constraints from those that they were actually invoicing as clients. So they were like, we actually need to use our own employees as on a 30, 60-day cycle for petty cash. And the actual real-time payment doesn't help us because we've got these issues already with customers. So it was even cascading, we realized, down to small business owners' employees. And so it's really challenging, I think, everywhere, but we found it more pronounced actually when we were trying to provide a solution that was really missing the mark.
Yeah.
So I think from our perspective, this is certainly a problem that we see here and on all the markets. So it's not very different to what your colleagues are saying here in the UK.
I assume it will be the same in the US. I don't know, Nick, if you can speak to that or any of the other panelists, but I mean, I would only assume it's, if you still pay your rent in checks, I can only assume it's the same there. So that's kind of covered the problems. Maybe on a more positive note, some of the solutions and use cases that open banking is trying to implement. I want to go over to Emma Steeley, who's the CEO of AccountScore, who hopefully can tell us a bit more positive light on what could be done here. Emma?
Yeah, great. Thank you, Isabel. Good afternoon, everybody. Just to touch on, what AccountScore actually do. We connect into the open banking regulatory rails, and we do that on consumer accounts as well as on business accounts. And then what we actually do is make sense of that data. We tend to work with financial services providers. We've been working in the SME lending space for the last 3 years, which was actually, to be honest, driven from our Indian business, because when we were looking at bank transaction data in India on consumer data, they kind of looked like micro businesses. So we actually started to work on our analytics and apply that to the SME market here in the UK. So yeah, I mean, I completely agree with regards to the late payment problem. Where we do tend to sit is we tend to sit with the SME lenders and with the broker market. And in order to try and streamline some of those processes and actually make that data usable. So for us, with the open banking data, what we're able to do there is where SMEs are applying for finance, they can easily share their data in a digital way that means that they've got access to that finance more quickly. When I was working with one of the tier 1 banks, they told me it was on average a 112-day process from an application to get the money into the customer's account. So that's when we started looking at additional APIs. So, we work with Equifax to bring in their Equifax business insights. We bring in the company's house API. We bring in open accounting data as well, all just to try and ensure that we're adding value through that process and getting, when the customers do need finance, that they're able to access it in a more timely fashion, So that's what we focused on. And in terms of engagement that we're actually seeing, it is different. The amount of engagement you see on the consumer sharing of the data versus the business sharing of the data. And I think a lot of that, to be honest, is down to the customer experience. We see.
Does that mean businesses are less willing to share their data than customers, or more?
I don't think then they're actually less willing. I just think it's more cumbersome for those that do have business bank accounts to do so. The app-to-app redirection on the consumer accounts, when it's on my phone, it's absolutely beautiful. And we see, from customers consenting to share their data, to actually sharing. We see around about 85% of those customers go through that journey. If I'm sharing my business bank account, I can't do that on my phone. I have to go and, I bank with NatWest, and so I have to log on to NatWest. And if you have 0 to 10 employees, the chances are that you've got somebody in your, you've got somebody that's your finance manager that actually is the one that knows your login, that I have no idea what my bank login is. So, it's all of those elements as well. And it makes it so it's slightly harder to share. So we actually only see around a completion rate of around about 50%, despite the fact seeing the same number, same percentage of SMEs consent to share. It's actually getting through the process that is more challenging for the SME.
And to Mark's point, what you do is helping access credit, but not necessarily access or speed up late payments. It's sort of the band-aid over the problem.
Well, I think that we've also do a lot of work in the collection space. Certainly, that's been driven by the pandemic. You need to be able to understand, okay, how does a business's cash flow look like today? Have they been part of the furlough scheme? And if you can map the cash flow appropriately and go, this is what it's looked like for the last 12 to 24 months. This is what we believe is going to look like over the next 12 months, then you can start to address some of those late payment issues. But it's about having to have that detail and understand that data, as opposed to just having loads of bank statements thrown at you.
Brilliant, thank you. So I want to go, you mentioned Equifax. We've got Andrew here, who's going to hopefully tell us a little bit more about that, and also what you're doing to fix the issues we've heard about. Andrew?
Hi, Andrew Fielder. I'm a product manager at Equifax. Kind of following on from what Emma was talking about there, we've worked very closely with AccountScore and built out using portions of their categorization engine to really try and help to understand what is going through business bank accounts, because we looked at, as a comparison, consumer versus commercial bank accounts, and on average, in a 12-month period, a person might have 600 odd transactions on their account, which on a paper statement looks at 30 odd pages. And then you get 1% that might have 2,000 plus transactions on their statements over the year. If you contrast that with a commercial account, the average is around 1,000 transactions over a 12-month period, and 10% of that, the population that we looked at, had over 95 pages worth of transactions. And in a lending space, that volume of data just becomes unmanageable. And it's really where we see the benefit of the open banking data on top of the open accounting data and the normal credit reference agency shared data, to give that real holistic view of what a business is doing. So we don't like to see ourselves as a barrier. We really like to see ourselves as enabling businesses to be their best and put in their best view forward to people who want to deal with them. And as we've heard, it's not just lenders. It could be other areas who can make use of that open banking data to help understand what a business position really is. Because as we've looked through data that hit in the first lockdown in the UK, when you looked at bank turnover over sort of a March, April, May period, when lockdown was really hitting in the UK, you didn't really see a huge dent on the turnover of accounts. You saw increases on things like government payments where furlough was coming in and loans were hitting. But the turnovers on accounts were fairly static, and a lot of that is because the government schemes were propping up these businesses. And to points that echo what Mark was saying earlier, some of this problem of lending is not ideal, and it's certainly something that's going to hit further down the line for some of these businesses.
So, do you service the SMEs or do you service the lenders? Which side?
We service the lenders that service the SMEs in Maine.
Okay, yeah, but brilliant. Okay, so that makes sense. I guess again, it does feed through to this lending part of the solution. So Mark, if I can come to you, are you specifically working with trying to get invoices paid quicker, or at least provide the in-between to SMEs? I just want to come to you next.
Yeah, absolutely. So what we're doing is, in fact, as I mentioned, we service financial institutions. We have built a request to pay service because we actually think that is one of the major opportunities for actually solving this problem. So I think it's really interesting listening to some of the panelists, and I think it really highlights this kind of how wide this segment is and how misunderstood it is in many respects. So if I could go back to the thoughts about integrating accounting packages, the vast majority of these sole traders don't have an accounting package, and they certainly don't have a finance department, and they probably don't even have an admin department. They do everything themselves. So again, quote, they spend an average of 1.2 days a month chasing up late payments. So that's 15 days a year. The average late payment value is £6,000. If you're a painter or a decorator like my father-in-law is, that's a lot of money. And they typically have lines of credit with Selco and other places. They don't go to their bank. They borrow money from their friends and family. 36% of them borrow money from their friends or family. They just don't use lending instruments. So we really need to focus on the problem. So what we're trying to do is put technology in their hands to create the admin department and the finance department. So we think request to pay is a really, really important solution to chasing up late payments, because it allows the business owner to do everything from their mobile device. So they don't have to be at a desk or a desktop. They can do it on the go. They can do it between appointments. They don't have to be doing it late at night at the weekends. They certainly don't need to use their business current account. They need to have technology that separates their business transactions from their personal transactions. There's no legal requirement to have a business current account. That can be run. You can run your business as long as you separate your tax filing, which is exactly what we do. And then the other thing that is actually automating the request and actually enabling the chase to be done via technology. So send the request via SMS, send it via WhatsApp, send it via email, send it via QR code. So replace the need for a card transaction. Do it in front of the customer when you're in their home. So if you're a builder or a painter, a decorator, an electrician, render a QR code, let them pay immediately when you're with them. Don't mention open banking. Nobody knows what it is. Just talk about value and benefit and allow customers to collect money using technology. This whole idea that it's about working capital to do with borrowing, we're completely missing the point. It's about making technology able to the masses, to the people that don't have it because their banks don't offer it, and allow them to use technology to actually make the problem of collecting that money more simple. And that's where request to pay comes in.
So request to pay is, I guess, a feature that you're integrating with some of the banks and banking apps. Anna, Boris, if I could come to you from Anna, just to hear about whether this is something that you guys are doing. Also speaking to Emma's point about having a banking app that allows this integration of data sharing that's slightly easier. Also, I don't know if you can speak to, so I used to freelance, and part of the issue is just you have these enormous departments within media companies or whatever it might be, and you don't know who to chase, and sometimes it's just chasing round the garden. So I don't know if that's solvable. So all of those points would be great as well.
Yeah. Well, I'll start from the end. I think it's really hard to chase somebody if you don't know who to chase. That one is really hard to solve, though. Yeah, the largest institutions that are not paying freelancers on time are larger companies, obviously. We're doing several things to help out. One of it is also the QR code link that allows to get paid immediately. But we don't use a card for that. We use an open banking solution, and it's growing exponentially. Once people try it, they love it, because that's exactly the scenario. While you're in front of your client, you can ask for money, and you can look at their eyes and watch them pay you. And that's an exciting thing for every small business, I guess. It's much easier to chase somebody when you know who to chase. Also, when we onboard the clients, we ask them to actually use it. Well, we don't say open banking, but we ask to link their other business accounts or personal accounts for us to have a better picture and to be able to serve them better. And unfortunately, only 10%. Around 10% of the clients agree to do so, and those who do, they normally would link their personal account, right, and not their business account. Obviously, if they would have, we would have had much better KYB process, much better offers for them, but very few do. On the brighter side of things, though, is that clients are really eager to use open banking protocols when they smell loans, when they smell money or some opportunity to refinance, then they're much more open to share their data. The issue is that we normally cannot share the data with other companies without further consent, and that makes the whole flow, the UX flow, the experience flow for small business really cumbersome and really difficult.
Yeah, that's helpful to know. So Nick, I want to come to you in Singapore. I don't know if maybe you could give some background as well on the regulatory situation there, which is obviously slightly different from the UK, and whether some of the solutions that you guys or open banking, what's happening in Singapore in relation to that.
I wouldn't start so much with the regulatory situation. I'd say Singapore's been my home since 2007, and I moved here from Australia. I was on a transfer with a bank, and I would say that the words at the time, mass affluent, became more and more frequently used. And if anything, that segmentation of customer, upon reflection, made me realize that banks in general were moving into a period of really having to manage risk. And so they became considerably more risk adverse. And this was only exacerbated when we entered into the financial crisis of 2008 and 9. And so I think since we see now today like a similar sort of downturn, a similar period that we're facing, where there's a lot of pressure on small business resulting from a similar dislocation, this time due to pandemic. The one thing that gives some optimism is that we have opportunities now for open banking solutions to serve as a catalyst, to improve credit infrastructure, to provide better real-time sort of cash flow management, some of the solutions that we've been hearing, and really enhance offerings to customer. So I think for now, like, we're finding that there is an appetite for because the demand's there, and also venture funding is going into these companies to support the gap that the banks were choosing not to serve.
Yeah, so just moving on ever so slightly, Neil, why are the banks choosing not to address this? I mean, maybe there's an obvious answer here. I don't know if you can speak to that.
I think it's a range of things, really. I mean, I think Nick summed it up. I think banks are particularly they are interested in larger businesses and businesses that have got a higher revenue going through. Most high street banks have removed their customer relationship managers for SMEs, so a lot of SMEs don't meet that threshold. So there isn't the support there. There isn't the guidance there to do that, to actually get involved in this market, really. And I think, again, what we've seen with the C-bills and the V-bills is that banks were and are very, very risk averse. They only really started lending when the government stepped up and basically guaranteed a chunk of that loan. And it's kind of interesting in the freelance sector, actually, because you mentioned you were a freelancer. IPSI have just done some work, and they estimate that in the freelance sector, virtually half of their people who they represent in the freelance sector, they weren't eligible for C-bills or B-bills. They were turned them down, and the bank chose not to access them. So, And the worrying thing for those people is they're actually living on savings and credit cards and borrowing money from people. So there's a real reluctance of banks to lend in this kind of area, really. So I think the work that is going on in open banking and giving people choice to finance is vital. Is really essential work, and giving people an alternative means to get paid. But from our perspective, we would rather increase the velocity of payment and make sure people get paid on time. That is the key for us. And doing open banking and alternative means they can go to is essential, really. It's having choice, because the high street banks really they're not that interested.
Yeah, obviously Emma's spoken there about trying to help lenders have more confidence in the people they're lending to. Again, sort of a tangential meta question, but is there no way that regulators who've obviously done a lot already in relation to open banking, is there no way that the regulator could say, you need to pay within 30 days? Like, why is that not a feasible answer as well?
It's not there, unfortunately. There are payment directives in regard to that. They already exist, and it's actually normally 60 days is standard payment terms. So I'm doing a consultation at the moment, and obviously this is a matter for government policy rather than us to talk about. But even when that legislation is already there, when there are late payment rules and there are late payments that occur that are outside those payment terms, we know that small businesses won't actually employ the law that's already there. The late payment to commercial debts is there. People won't, and that gives people the ability to charge interest and charge for compensation there, and people won't use that as a means of enforcing payment because they fear damaging their relationships. The regulations are there already to an extent, and in regard to sort of making people pay within 30 days, there's currently a government consultation in regards to that. They're looking at the powers of the Small Business Commissioner, but the regulations is actually around 60 days, and that's what the governments are basically saying. They're staying within that.
Yeah, clearly I'm a lot more draconian with my 30-day demands. Okay, so we've obviously spoken a little bit about open finance there as a partial solution to this problem. Already people have mentioned a couple of pain points within that. So just thought it would be helpful to clarify what those are and some of the hurdles that open banking is still addressing. Boris, if I could come to you first, you obviously mentioned, Emma as well mentioned this, just in terms of having people share their data to make open finance a viable solution. What are the ways that we can improve that? Have you seen that alter, as you said, during COVID, or is the data point just a matter of time?
I think Apple came up with a really cool invention, and other mobile providers, when you allow an app to have an access to your data for 15 minutes, for 1 hour, or only while using an app or whatever. Because currently you either give an access to your data, and then there is a whole huge process to revoke it. And that's really cumbersome. What it seems that customers might need is that they just want to share the data, for example, for them to be considered for the loan. They might want to share it with pretty much all the lenders on the market, all those who might be willing to refund their invoices or to chase them for them or whatever. But then they would like to revoke that. And this thing is currently not possible. It's also not possible to bypass the data for some purposes of the similar nature. Because what we've seen is that clients are sharing their data, and I've heard the concerns that like 100 to 200 of pages of data is too much, but employing artificial intelligence doesn't seem to be a problem to chew through the data and to do some pre-scoring decisions. And the thing that we were doing at Anna is offering our clients pre-approved credits, but then they had to go to the lender and do the whole onboarding process again and share the transactional data with them afresh, because we obviously could not do the full scoring for the lenders. The lenders have to do it themselves based on the fact that data is shared with them, and clients cannot share their data with the lenders through an intermediate provider. So that might be a solution.
Okay, cool. So, yeah, and obviously, as you say, just having people share it is one of the big obstacles. Emma, I want to come to you. I don't know if this is too cynical, but I wonder if people also are reluctant to share their data, not only for privacy and data and just financial security reasons, but also because they're nervous that the lender won't approve them if they can see that they spent £100 on their ASOS a month ago. You know, like, is there also a trust thing in that the lender, or preempting the lender's resistance to them? Is that something that you see?
Yeah, I think you have to work with your audience, right? And every lender is after, whether it's in consumer lending or SME lender, they all have different risk appetites, you know? So, it's about presenting to that customer, and so that customer goes, right, what is it that I want and what do I need to do to get this? And then there is an element, and it may be cynical as well, but there is an element of it being a self-fulfilling prophecy that, if you're not willing to share your data, then there may be something going on. But what the lender needs to do then is give an alternative way of potentially getting data, even if it is the old school way of letting them upload a bank statement, for them to be able to have a look. Yeah. So you do have those elements in there for sure. With regards to, I just want to touch on a point actually that Boris made with regards to the aggregators being able to onward share that data. As long as that, and we work with the aggregators, and so what the aggregators have to do is they get the consent to have that data passed to them in the first instance, but then it's a GDPR point, not an AISP point, that lender then, the broker then has to have explicit consent to do that onward data share to the lending panel, and then they are able to do that. And if you're able, with the technology behind it on tokenization, it's not just data being like sent down lots of different to lenders via APIs. You've got a customer reference as a token, the token gets passed, they hit the AISP's API or request their dashboard if they're doing manual underwriting, and then they are able to do that process. So I think there's been big progress, great progress actually throughout 2020 in that aggregator market as to how they can capture the consent up front and then move that data on. That's what we do with those funding options, funding exchange, and those guys.
Interesting. Okay, I wanted to move on to Andrew. I mean, I guess another problem, not just with wanting to share your data, is just understanding why you need to share it. And Andrew, a question came through for you, which is how mature are lenders in their understanding of open banking data and how it can help them in their lending decision process. Are you seeing progress there with you guys?
Yes, we are. Certainly to a degree, people are starting to get more comfortable with it, probably a better way of putting it, because they're starting to understand that integrating open banking data into a journey, much like it's been said earlier with the app redirects, is becoming a lot easier to do. It shouldn't necessarily be a barrier or something that stands in the way of a decision happening. It's just a further enabler to help people get to that end answer, because it's there to really give their best view of themselves rather than there to, and taking on board your point around the ASOS piece, yes, some of that stuff will come out, and echoing what Emma said around the understanding of the risk appetite. There is definitely improvement in lending journeys, and they're a lot more seamless these days. Back from when the original processes were out and people were coming from Yodlee type journeys for lending. It's definitely improved over time now, and it's a hop through between the processes, and your data's there and it's available for review, and people are understanding the power that can add to a journey for a client.
Yeah, cool. Okay, so that's I mean, and again, just trying to get that lending piece easier. Still, clearly some obstacles there, just having people understand it. Mark, with you, are there any bugbears with the request to pay? Is one of the bugbears actually just getting the banks to get on board with this?
No, in fact, you can completely go outside of the banks. That's the beautiful thing about open banking. One of the things I really do want to throw into the conversation, though, is it's fascinating just listening to the language that people are using on this conversation and that we use in the industry. We talk far too much about, we internalize these discussions way too much, and we talk about artificial intelligence and consent and access to data. And, you know, my friends who are osteopaths and painters and decorators and plumbers and electricians, they have no idea about any of this stuff, and it's completely irrelevant to them. We need to start talking in value and benefit terms. You never need to mention open banking. You never need to mention consent. You just need to tell them you can make their lives easier and you can help them get paid quicker. So, you know, despite the banks kicking and screaming about request to pay, it's happening. There's various companies doing it. It's actually nothing particularly new. The accounting vendors have been doing it for donkey's years. You just have to use an incredibly expensive instrument called a debit or a credit card to pay for it. So, you know, if you talk to a painter and say, I can actually get you paid today, the money doesn't go into some bogus account that you might get your money in 4 days' time. It actually goes into your bank account. We don't take any absorbent fees off you. We just charge you a minimum value of the transaction, whether it's £5 or £5 million. And you know what? You might have to get, you might give access to your bank account so you can get money to go into it, but you don't mention consent and sharing of data and all these irrelevant points to them. You just tell them that you're going to help them get paid quicker, cheaper, faster, simpler, and you're going to help solve the late payments challenge. And the request to pay thing, open banking is made that beautifully simple, because you can actually link any bank account, whether it's a personal account, whether it's a business current account. You don't need to have a registered app on the other side. You can just say your customer pays with their bank account like they do with mobile banking or internet banking today. But the really good thing is they don't need to know your sort code and account number, and they don't need to pre-fill a form. It's all done for you. So we need to stop talking about all of the technical mumbo jumbo that means nothing to anybody and just talk the value and benefit.
So Mark, if you're using just value terms, does that mean that 100% of people that you speak to don't have these concerns that Boris and Emma have outlined about?
Do you know who the people are that have the concerns? The people within our industry. Oh, you can't send a redirect. You can't have a pay button. You can't have a link in an SMS message. No, you can't do that. We've been telling customers for years you can't do that. Meanwhile, they've been doing it for years with a debit card or a credit card. You know, we make barriers for ourselves in this industry because we internalize it. We actually don't talk to the people who are actually going to use it. And I'll give you a great example of that. I sat on the phone for 1 hour and 35 minutes with, and I'm not going to name the high street bank, but you'll see it on my LinkedIn post. And I spoke to 5 people at that bank, and not one of them knew what open banking was. I was having to tell them as their customer what open banking was. That's absolutely outrageous. And it highlights the problem that, you know, we have an issue because it's the best kept secret in the world, because, you know, cynically you would say it's not really in the interests of the banks to offer open banking. Where do they make any money from it?
Yeah, the reason I ask, and I guess I'm asking if 99% of people you speak to are on board with it, is because if you think about it, the next generation of SME owners are going to be 25, 30 today, right? That will be the generation that grows up. And if I just give you a sample of anecdotally of my peers, most people open banking aside, I wouldn't mention those terms, are very nervous of sharing their data, their bank data, with apps that want to help them save, or apps that want to help them round up. So that's kind of, again, just anecdotally, the feeling of the next generation of SME owners might be the same as what these guys have been saying, but maybe, as you say, we just lose the mumbo jumbo. We will fix that.
The use case of request to pay is very different than the use case of saying, let me see all of your data so I can analyze everything about you. If you just say, I just need access to your bank account to pop your money into it, not through an intermediary, but your money from your customer, and your customer doesn't need to know anything about your account.
Yeah.
It's nothing more than they already do today, except they don't have to key anything in.
Yeah, for sure. Nick, what's the attitude in Singapore and APAC? Is there slightly more open to this?
Yes and no. I'll need to be a little discreet here with the words that I use, but I mean, I think at times if I was to use the word tell and the word car and you switch them around, I mean, that's some of the luxury that's afforded to some of the incumbents in Southeast Asia. They do have certain rights that, challengers find difficult. And so even if you look at some of the biggest and brightest from, let's say, the UK or Europe who've come out here, they have had to trade sideways until they worked out this landscape. It's not open for all, even if the wording and the signposts say that it is. So it takes time to build relationships, to embed into the ecosystem. I will give you one example. Like, we have a little show and it's got none of the polish or colour of what Helen and OBE do. Certainly doesn't have your professionalism of interviewing, for that matter. But we had a Swedish entrepreneur a few weeks back, and he launched the largest loan broker in the Nordics, came out to Singapore to do the same. They were aggregating loan applications. These are personal loan applications, but some of them are used by people who obviously have debts in their business. As was mentioned before, there is some commingling. But imagine that now 10 to 20 different providers, one form, you get a response back that says, okay, these three, rather than having to go through that process yourself. Now, we said in the promo, you make loans easy, which is what we thought this solution did. It was actually improving the lives for those who needed access. And he wrote back very quickly and said, we get told by higher powers we can't say that. Loans should be hard. Right. So there's still a challenge, I think, at times in the system that will break down over time, but we have to sort of play, and acquiesce to certain sort of like continuing, rules of the system. I love how this conversation has talked about improving lending journeys and Mark's conversations around the fact that we don't talk enough to the customer. We sort of get stuck in language, which is very true. But some of it is, I think, still, at least in this part of the world, gated by norms and conventions that are dictated to us.
Yeah, interesting. Okay, just to round off, I don't think we've got any more questions from the audience, but now is the chance. Actually, someone has just sent one, but now's the chance, just while I get a roundup from the panel. If you could wave your magic wand, what would be the number one thing that you would do to fix this problem for SMEs? Open banking and beyond. You can, as I say, be as draconian as me in your ideas of what regulation should look like. Emma, if I come to you first, what's the number one thing that you would like to see improved for SMEs in the next 12 months or so for this problem?
Education, I think, in terms of real understanding of, there is an opportunity for them to understand sort of like what their business health, whatever jargon you want me to use, is actually like, how is their fitness kind of looking, and actually by looking and by them understanding the transaction data, they could also understand how they are viewed from a perspective from a lender. So I think if we can gradually educate on the SME side as well, then I think it'll just be beneficial through to the future, and should hopefully feed in to what Mark has been talking around with the late payments piece as well. That if people really know how they're viewed, then that's very helpful.
Cool. Nick, if I could come to you next.
I'm being incredibly fanciful when it's never going to happen, but if we're talking about magic wands, I'd have everyone who's ever worked in a bank go and second into a different startup for 1 month and vice versa, and just have the variety of experience to maybe change mindsets and ways of working.
Yeah, I think that's a smart one. But again, maybe the magic wand would be needed for that. Andrew, what was your wish to your fairy godmother?
I think what we've seen actually announced or talked about earlier this week from Bank of England around open data, expanding that open data out. So it's not just the banks, it's expanding it across all sectors. So removing those barriers for information that can be shared around for whatever purpose. So really opening the data out and making it so the bank passport idea has been floated on that presentation from the Bank of England, but probably not the worst idea in the world, but it's certainly one that could really change how information and business flows around.
Okay, and Boris?
Well, my magic wand would be really brutal. I would, in the UK, I would make public the information on for how long this company normally pays invoices, how many days does it take them to settle, and do they settle them at all? So when you're actually giving a loan to somebody and expecting to be paid, you see what your chances are, and you might think twice about it.
Yeah, cool. And Mark?
So my wand isn't big enough in terms of my wish list. It's a bit like writing to Santa Claus. I've got a very list. But what I would say is I don't think I'd use the word education because that's it almost is a little bit condescending when you talk to the small business owners. It's more about awareness, and actually the awareness needs to come from our industry, not them. We need to understand them better, and we need to stop talking about what's beneficial to us, and we need to address the real problem, which is not the mythical amount of money that needs to be borrowed. I'm just going to quote you one more thing, Helen, because you asked me to do that. 600,000 bibbles given out by July of this year, 18.5 billion on the balance sheet. The UK banks think that 50% of that isn't going to be paid back. Who fits the bill? The UK taxpayer. So let's really talk about the real issue here, which is not lending and borrowing and data and making the credit process easier. Let's get businesses to start paying when they should be paying, governments, banks, whoever you might be. And I guess that goes to Boris's point. And I think actually, Boris, that's already there. Neil's team already shame companies that don't pay on time after a number of warnings. So it's about addressing the real problem. Let's stop pushing debt on people's balance sheet when they don't need it.
Brilliant, thank you. And Neil, last but not least?
Yeah, like Mark, I've got a huge wish list that I wish we could do, really. But I think education and awareness is a massive one for me. I'd really like to raise the awareness of what we do across the business community in the UK and how we can help chase down late payments and non-payments, because we're there and we can help for free. And we are a government organisation, and we just need people to come and bring those issues to us. But the main issue for me really is whether it's on 30 days, whether it's in 60 days, whether it's in 45 days, is for business to pay on time. Just pay suppliers on time and we will remove this problem.
Brilliant. Okay, well, that's fantastic. Thank you guys so much. I will hand back over to Helen. I was also reminded to tell people to fill in the poll before you go, which is what is the coolest open banking experience you came across in the last 30 days? And you can win a Starbucks gift card if you fill it out. But thank you so much for joining. And Helen, over to you.
Isabel, thank you. Wow, absolutely superb. Isabel, I actually loved your roundup question. I actually might use that myself when I host a couple of panels. So thank you for that one. It's really good. Thank you. That clearly is a conversation we need to continue. I've just read somebody on Twitter that said it was a fascinating insight into SME, and somebody else on WhatsApp has just said that it was brimming with data. So a big thank you for our panel sharing all those insights. Tatiana will be putting the recording on LinkedIn, and that's so that you can watch it again and share it, but also so our friends in Asia Pac can, when they wake up, can view it as well. We have a large audience now out in Asia Pac, Australia, Singapore, and Hong Kong. And at the top of your screen, I'm just going to give one last shout out as submissions are closing for our Appathon. So it's a great opportunity for you to have a look at the APIs from Yolt, Finastra, and Railsbank. And lastly, we are going to a planning session now during December. So please, please, please send me your feedback, helen@openbankingexcellence.org, on what you would like the hot topics to talk about. It was our amazing community that asked for this conversation, and that's why we've gathered everybody around the campfire. So please let me know what you'd like to talk about in Q1, Q2 of next year. And all that remains for me is to say an absolutely huge thank you for the panel for coming and being so generous with their insight, and absolutely doing the homework that I asked them to do, sharing user cases and all that data. Karina, I can't wait to see your graphic recording and to put the slow-mo online. So Nick, you can now get some sleep. Thank you very, very much. And all that remains is for me to say is everybody stay healthy and please take very good care. Thank you and goodbye.